Friends, in today's video, we will be discussing about the share capital, how it is to be shown in the balance sheet. Here in the given question, we are provided that Sugandha Limited is registered with an authorized capital of 10 lakh, that is 10,000 shares of rupees 100 each. 100 is the face value and number of shares issued were 10,000. So this shows that the company was registered with a capital of rupees 10 lakh, which shows that it is the authorized capital. The whole capital in the balance sheet is divided into the three parts. One is the authorized capital, second is the issued capital, third is the subscribed capital. So in particular this case we have to show notes to accounts. For showing notes to account, first point, share capital, authorized capital. Here in the question we were given 10,000 equity shares of 10 each. We have shown the amount of rupees 10 lakh with the double line here. Okay, then issued capital. In the question it is given that company issued these full value of shares for the public subscription. So the issued capital here is 10,000 equity shares of rupees 100 each of rupees 10 lakh. So what it shows, you can take it as a your counter where you have placed 10,000 balls, let it to be 10,000 pens, it is to be you were having in stock to sale, and actually you have kept all of them at your counter for sale. What it is, this is the total stock with which you are ready to sell, and you put the whole stock at your counter for sale, so it becomes issued. Now for the subscribed capital, we have to see that how many have been actually took by the public. So here in the question it is given a shareholder holding 100 shares failed to pay the final call. As the question is silent that how many shares have been subscribed, so here we will suppose that it was fully subscribed because it's written only about the shares on which we have not received the amount, right? So first of all, that means that 10,000 shares were subscribed by the public, out of which 100 shares we have not paid us the full amount and their shares were forfeited. Okay, so in this question 10,000 shares, out of these 10,000 shares 100 shares were forfeited. Then how many shares were fully subscribed? That was 9,900. And if these 100 shares were kept as forfeited, so in that particular case this forfeited amount of 100 shares would be shown separate to this particular point of 9,900 shares, right? So we are discussing firstly till this particular point. When he says that when we have issued these shares 100 shares were forfeited, so we will do for the subscribed capital, subscribed and fully paid up capital, 9,900 shares into 100 each, 9,90,000 shares are here, plus forfeited shares. Now what is forfeited shares? Shares on which calls were not paid by the public. We have bought back our shares and we have not refunded them what they have paid. It's like on 100 shares the total sum of money paid was out of 100 rupees 20 was not paid by them. Then how much was received by the company here? 80 rupees. When these shares failed to pay final call, company forfeited their shares, mean company took back their 100 shares and also keep the money of rupees 80 per share with company only, with themselves only. So that means the company have a total benefit on these 100 shares of rupees 80. This is known as a gain. So this 80 rupees which have been kept by the company with themselves is total sum of rupees 8,080 into 100 shares, 8,000. This is added to your subscribed capital. Forfeited shares account is added to your subscribed capital to show a total sum of rupees 9,98,000. So for this particular case, if the balance sheet is prepared in equities and liabilities under the head shareholder fund, share capital, notes to account, here share capital would be shown out of these three value only for the subscribed case, that is with rupees 9,98,000 in your balance sheet it would be shown here. Okay, Now, this was the case of your forfeited. Now, let's suppose the question does not stop here. The question says that these forfeited shares were reissued at 90 per share as fully paid up. Now, these 100 shares which have been bought back by the company were brought into the market and again sold, and these were sold and money received was 90 rupees, but these shares were made fully paid up. So when the shares are resold and made fully paid up, that means in this particular case, under the head subscribed capital, we have total 10,000 shares with the general public. 9,900 shares were already with the general public, 100 shares were reissued, so the total sum remains 10,000. Now they were made fully paid up means equity shares of rupees 100 each. So the total sum of money here is rupees 10 lakh for your subscribed capital. For second case, if we have to do this second case and we have to prepare notes to account, the first point would remain same, authorized issued would remain same with the amount of rupees 10 lakh. Only subscribed capital would change for the case if they were reissued, the shares were reissued. In that very case, the subscribed capital will become 10 lakh, and in that very case your balance sheet value here again would be shown with the value of rupees 10 lakh. The point is to be kept in your mind is, for the share capital to be shown in the balance sheet under the head shareholder fund, we always take the amount from your subscribed capital. If it was of rupees 9,98,000, we have shown that value. If it was the concept of your reissued, then we would have shown which value, rupees 10 lakh instead of 9,98,000. Thank you. Accountitude. Keep scoring. Like, share, and subscribe to my channel.